So, good evening again to everyone. We are almost mid-month, little crossed the midline, 17th of Feb, Saturday evening, 5 p.m. as always. Our weekend masterclass session, the first few minutes, we're going to take a look at the Nifty, Bank Nifty and sectoral indices. We're going to take a look at the RRG graphs and the sectoral rotation. How are they playing out? And after that, as always we do, we will update our sheet and take a look at fresh opportunities for the next week, and of course clear out all your doubts and questions. I have the Nifty chart in front of us, the weekly, daily and the 75-minute time frame, a factor of 5, and what we can see is we have a bounce back. And it seems like it is en route to touch a new all-time high again. The last time it touched an all-time high was just a touch. It didn't even sustain, it immediately slipped. And so that's why the market had stayed choppy. All this while, we can clearly see the degree of choppiness. Highs getting broken, not sustaining. Lows getting broken, not sustaining. All-time high test, slips, and now again a bounce back. So it will not be wrong to say that the market essentially is trendless, or the short-term trend doesn't seem to sustain. It is a range-bound choppy market, and probably it is likely to stay. Weekly charts, I can clearly see a slanting behavior. There's a slant divergence that's shaping up between our trend path and our momentum indicator. This is essentially a sign of slowdown, and that's exactly why, if I mark it here, you will notice all this while the market was choppy. That's primarily because of the disconnect between the weekly trend and momentum. So what can we expect going forward? Well, we can expect that choppiness to stay, but the way the market's been bouncing back, the way the higher time frames are supportive, of course it's more bullish as of now. Things change in a matter of 2-3 days, but as of now at 22,040, it's looking like it's heading for an all-time high and further upsides. So we would be cautiously bullish. Cautiously because of the disconnect of the possibility of a slowdown, and bullish because the trend is still holding really well. Last week's range, if we talk about, I think it's going to play an important role from a very short-term point of view, especially on the downside. So those who are predominantly bearish and they would want the market to come down and make money on the downside, strong request is wait for the market to break last week's low. I think this is going to be important, little below 21,600. Every time in the recent past the market had turned down, pullback had led to only one follow-through selling. After that, any fall has, what I mean to say is, say the market has fallen, comes the pullback, and the market has fallen more. This has only happened once. Okay, an ABC kind of a correction. So a complex correction is due, but when? Time will tell us. Till then, stay cautiously bullish. CNX 500 is also looking okay-ish. I can clearly see the slant divergence picking up here as well, which is not much of a surprise. Some kind of a structural divergence also shaping up on the lower time frames, on the daily time frames. So I expect the broader markets also to stay choppy with the Nifty. Mid caps, small cap, both the indices, especially the mid cap index, I'm quite sure that last week's low is going to be very, very crucial from a bearish point of view. Only if last week's low is broken can we expect some serious weakness. Now, Bank Nifty did play a role, and quite a bit of a role. It definitely showed strength, that it bounced back from its intra-week low and bounced back pretty high, and has created an outside bar. The range expansion is very, very clear on the weekly chart. It had predominantly stayed choppy, just like the Nifty, range bound. Is this a double bottom? Well, it looks like that. I will not personally call it a double bottom, because it has taken almost 22 bars to form. It has taken 22 bars to form the double bottom. And the trend is down by just 7 or 8 bars. So I don't think that a trend which is just 7 or 8 bars needs 22 bars to kind of form a reversal pattern. So I'll not agree to the fact that it's a double bottom, but it looks like a double bottom. It's not a bad bottoming out pattern. I like the fact that it has kind of created a good divergence. It's picked up nicely on the daily time frame. Heiken and Ashis have started to improve. So I'll be looking for buying opportunities next week. If I get a good decent short term, pullback, then on the way up towards 47,250, I think this kind of a move will definitely support the Nifty as well at all time highs. So keep an eye on Bank Nifty. Coming to auto, now I think what we can do is we can come here at RRG graphs. First, let's reduce the tail length to 1 week just to quickly see what happened last week amongst the sectors. And as you can see, if I sort it, it's CNX Auto which did phenomenally well, followed by oil and gas, and it has been doing well. And the oil and gas stocks have been shooting off the roof. IT bounced back after a quick dip, managed a decent bounce back. Bank Nifty, remember we discussed this, the tail was down, and these are the ones which has managed a bounce back, and almost a heavy weightage definitely helped. The ones which underperformed is metal, sadly. It has come off. Now Hindalco is a one-off, that's why. Media has been under some pressure, and then FMCG, yes. So this is not much of a surprise that FMCG has stayed down. Consumer durables was also one index we discussed last week, but consumer durables have managed a bounce. So I can see a mixed performance. I can see strength from, or should I say gains from strong sectors. I also see gains from weak sectors. I see weakness from strong sector. This is weakness from relatively strong sector. And I of course see weakness from a relatively weak sector. So strength from or gains from strong sectors and weakness from weak sectors, this is not a surprise. But what is an exception is a weak sector turning around. And what is important is a strong sector turning around. So let's take a look at the turnaround. Let's increase the tail length to around 12 weeks. Yeah, that's fine. Let's fit it. And let's take a look at Bank Nifty. So Bank Nifty is still at the lagging quadrant. Okay. In terms of strength, it's not there. In terms of momentum, is also not there. So RRG graph is not giving us really strong indication that Bank Nifty can go up. However, we just analyzed the Bank Nifty and it looks interesting. Any kind of pullback can be an opportunity for an upside towards 47,200. So it will be interesting to see. For all you know, Bank Nifty can stay range bound, but relative strength is not suggesting that as of now. The other sector that was strong but weakened last week was CNX Metal. Now over here also there is no significant sign of weakness if you talk about the CNX Metal per se. It's in the leading quadrant. Relative strength wise it's kind of fine. Momentum wise it's kind of slowing down. So if we come and take a look at CNX Metal, we will see a pretty decent high ranged bar. We will see a sharp sell off and a 3-day bounce back. If we do our elemental readings, trend is down, momentum is down, we've got a bounce back. Higher time frame, there is a slant divergence. So it's angling more on the downside. Probably we are headed for a complex correction, maybe. But I sense that it's predominantly likely to stay more of a range bound activity. The range has expanded. See this, if you will notice that this range has expanded, the choppiness has expanded. So the directional clarity is going to last for just matter of 3-4 days, and again the direction changes on the other side for again 3-4 days. So that's the kind of market. It's not going to be easy to trade, but that's how it is. If we take a look at, now if I quickly take a look at the rest of the sector, oil and gas, strong. There is no need for any kind of a short attempt in the CNX oil and gas. Should we take a look at the chart? Is it reflecting the same thing? Now, what I like to do is not rely completely on RRG graphs. I always read what the relative strength readings are telling me and then try to corroborate that with the chart. If it matches, it's good. If it doesn't, well, I personally give more weightage to the charts because it's price that will change the RRG graphs, not vice versa. So strong weekly charts, decently strong daily charts. I use the word decently strong because I can see a nice divergence playing out for a contra trader, someone who loves to short a rising market, would like to take a look at energy. But those who like to ride the trend will never short the CNX oil and gas. So I would suggest not to go contra in this market unnecessarily. Lower time frames one can attempt these kind of falls, but from the daily or the weekly chart, please don't attempt to short this space. Next one is reality. Now reality is losing momentum of relative strength. It's not losing grounds. Let's understand this. The vertical fall of that dot tells us that real estate is still a very, very strong, relatively outperforming sector, but the degree of outperformance is slowing down, and we can clearly see this. For 5 weeks it has gone range bound. Earlier it was outperforming crazy, and this slowdown is what is getting reflected here, this one. So bullish, but don't go aggressively bullish. You will get choppy behavior, and even if you get some shorting opportunities, one can go for it. Just remember, short-term traders, your trades is going to last for 2 to 3 days max, not more than that. So possibility of some weakness there. IT is something which looks beautiful on the RRG graphs. Upward sloping within the leading quadrant, horizontally gaining grounds, vertically gaining grounds. This is a beautiful case. This tells us, at least the RRG graph tells us, that IT is the pack stay bullish. Charts say that as well. I don't see any sign of weakness on the weekly or on the daily. Daily weaknesses were mildly, choppy consolidations, nothing much. So IT, please stay bullish. This matches. Auto, the biggest gainer this week, has kind of picked up as it was slipping from leading to weakening. It kind of picked up sharp, and this is the nature of RRG graphs. They do not always go smooth clockwise. Within themselves also they are choppy. So CNX Auto had a big move. Weekly charts stretches itself further up. Daily charts, after a short-term dip, again bounces back pretty sharp. Pretty strong if we take a look at the sectoral stocks, and if we come here, you will see that M&M was the stock that actually contributed the max to this move, and if I'm not mistaken, Mahindra happens to be the stock which enjoys the maximum weightage. So we are not surprised that CNX Auto is the largest gainer, sectoral gainer last week. Yahan aate wapas, and we have healthcare. Now healthcare is okayish. It's right at the quadrants, right at this axis point, and showing a bit of strength, not giving away that easy. If we take a look at the CNX Pharma Index, we will see a decent looking weekly chart. We will look at a decent looking daily chart. Now I want to bring your attention to one thing. Breakout failures tend to happen in these kind of situations. What I'm trying to say is something like this. When you see a fresh breakout, at least when I see a fresh breakout, I always consider this with a pinch of salt. Question mark, is it going to last or is it going to fail? If it fails, the very next day the low will be broken. And if that happens, expect a down move. This is a classic breakout, short-term breakout failure. Classic. So the moment I say this, and when it kind of aligns itself with our momentum readings on the downside, so it's a slant divergence and it's showing strength. During a slant divergence, generally you're not supposed to show strength, and if you're showing strength, does it mean that you're going to turn around the momentum, or does it mean that this is a fake move? So just Monday, if you see a break of Friday's low, on the bar chart, not on the Heiken Ashi, you brace yourself for a short-term weakness. So healthcare is chopping around, more or less there. Metals we have discussed. Consumer durables and FMCG we were kind of bearish. Consumer durables did pick up last week. FMCG did not. Both the sectoral readings on the RRG are in the leading quadrant, within the leading quadrant. They are losing horizontally. They are losing vertically. So these are not good signs. According to RRG graphs, these are signs of weakness. Our charts will, I think, corroborate with that. We can see the weekly chart of FMCG. Now, I have been looking closely, more or less at this zone, for some signs of the FMCG giving us a bounce back. What I see is the breakout getting tested, retested. But the fact is, it's not shaping up on the daily chart. That bounce back, it's not shaping up. Whatever little bounce backs have come, have kind of dissipated. So I'm quite sure somewhere in the near future, there will be some kind of a short-term reversal, which will be much meaningful than just a one-day bounce back. But on my charts, what I see right here, I cannot comment on that right now. So probably it needs a little bit of more time. So stay away and wait for some bullish sign. Consumer durables, on the other hand, if you can see, hasn't weakened that much like FMCG. Consumer durables, if you see, has managed a much sharper bounce back. So it seems like it's showing some strength. RRG graph, however, does not say that. RRG graphs are suggesting. So we need to be careful if we are dealing with consumer durables, especially on the upside. The trade should be short-term in nature. Are we left with anything else? We are left with media. Media is something I never liked, and this is something that there is nothing to be liked. So more or less, I think what we can wrap up this sectoral analysis and market analysis by saying, one, Nifty continues to stay range bound and choppy. Downsides and upsides last for like 4 to 5 sessions on either direction. There is a clear sign of divergences on the weekly charts, which are not sign of correction, which are signs of slowdown. And so that's why the choppiness. A few sectors have shown great strength last week, like auto, but I think we will get trades or opportunities on either direction. We'd like to take longs more cautiously. Bullish is the overall strategy, but you never know if you get a decent short trade, and we have attempted that last week also with some degree of success. So we are open to trades on either direction of the market. Little bias on the upside, right? So that's it from my side in terms of the market analysis, the sectoral analysis. Now let's take a look at your questions first, and then we'll update our sheet.